However, for discussion purposes, we will have the manual bookkeeping accounting cycle. So here it goes. This is a 9-step accounting cycle wherein we have the first step, identifying, analyzing transactions, second, journalizing to the journal, posting to the ledger, preparing a trial balance, adjusting entries, adjusted trial balance, financial statements, closing entries, and post-closing trial balance. In some other books, there are 10 steps, and the 10th is all about reversing entries. However, there are also some books that has 6 steps in the accounting cycle. So we'll be using this 9-step accounting cycle. And this accounting cycle is, of course, is discussed in both FABM 1 and FABM 2. So for you, for now, for this semester, we will have the first up to the 6th step under FABM 1, and then under FABM 2, the 7th up to the last step in the accounting cycle. Let's have an quick overview of this accounting cycle in a service business. Identifying and analyzing transactions, identifying whether recordable or not recordable, financial transactions is recordable, business transactions recordable, personal transactions and non-financial transactions not recordable or no entry. So this first step is crucial. Next, after identifying the transaction, let's say we have this identified transaction below, an investment of Lisa to her business. Next step is journalizing to the journal. So under this, we have the process of recording transactions in the journal, which is journalizing. So here, we have the debit and the credit side. What you need to know here is the rules of debit and credit and the normal balances of each type of account. Now, if given the transaction, the journal entries for that is this one. Date, then debit cash, credit Lisa capital, explanation, and then the amount. That's it. So under this step, you need comprehension and analysis. After journalizing is posting to the ledger. Posting is the transfer of entries from a journal to the ledger. So meaning to say, all entries in the journal will be transferred in a specific ledger. For example, we have this set of entries in the journal. So to transfer this or to post this to the ledger, we will have this result. So I'm just simply showing you the accounts or simplified ledger. Just a quick overview of this accounting cycle and how it works. Next is our and under this step, you need to be consistent. Preparing a trial balance. So in the accounting cycle, as you can see, we have 3 trial balance. The first one is the unadjusted trial balance. The second one is the adjusted trial balance, and the third one is the post-closing trial balance. So under trial balance, we can prepare this if we have the balances extracted in the ledger. So since we have already the ledger, we have the balances extracted. Now we need to combine this in a specific format, such as unadjusted trial balance, then listing the account titles with a debit column and credit column and summing both. So under this trial balance, this one is unadjusted, the total amount of debit must be equal to the total amount of credit. If not, then you need to go back to your step 2 and 3 to check where did you go wrong. So here we need consistency and correct computation. After the unadjusted trial balance, we have the adjusting entries. Now adjusting entries is prepared for the accounts that should be adjusted. So example, just to show you, after a physical count on January 31, there's this note stating that supplies at the end of January 31 amounts to 1,700. If we go back with the previous set of transactions, our supplies here, I crop it up in the ledger, so our supplies is 2,000 on that day, January 3, 2020. Now at the end of January 31, it amounted to 1,700, meaning to say there are some portion of those supplies that were used up. So we need to adjust this, and this is now the adjusting entry. So this happens in the 5th step, or the preparation of adjusting entries. Now don't worry, we will discuss more of this in the next video lesson. Here, comprehension, analysis, and of course the computation. Next is preparing adjusted trial balance. Since we have adjusting entries, so we need to update the journal, the ledger, and then prepare the adjusted trial balance. So here, since we have the supplies adjusted earlier, so we have new balance 17, and then supplies expense additional account title, so additional ledger. So it must reflect also in our adjusted trial balance. So supplies in our adjusted trial balance have the amount of 17, and then we added up supplies expense in the list of account titles with the amount 300, and then totaling both sides, summing it up. So still we have total debit 60,000, which is equal to total credit 60,000, meaning to say we are still correct. If the total amounts are not equal, then go back to the previous steps to check where did you go wrong. Here we need to update and compute proper computation. Next is the preparation of financial statements, which will be discussed more in your grade 12 FABM 2. So just an overview, we have here the FSR for financial statements, statement of comprehensive income, telling you whether you have net income or net loss, kumita ba or nalugi, that's it. Statement of changes in equity, the changes within the capital or the investment of the owner. Then statement of financial position, the total assets, total liabilities, and the total capital. Statement of cash flow, the movement of your cash, where do your cash came from, where did you spend your cash, and so on and so forth. So those are the financial statements. Then after that, journalize closing entries, meaning to say you are closing all nominal or temporary accounts because you will end the accounting period before you can proceed with the next accounting period. So here you're identifying what to debit and what to credit. Then post-closing trial balance. Again, at the last trial balance, so we need to identify or we need to produce a closing trial balance with equal total amount of debit and then equal amount of credit. So these are the steps in the accounting cycle.